Hey, everybody. Happy to join us in our latest TDR Trade to Black podcast. Full swing into the earnings season. A lot of companies obviously reporting here over the last couple of days. And our latest is MariMed, who produced some strong earnings, strong top line, and wholesale as they continue that trend here in the latest quarter. So find out more. Let's welcome in their CEO, Jon Levine, back to the podcast. Happy summer. Time's flying. Good to see you. How are things?
It's great. So nice to be back with you. I'm happy to be here. And, it's amazing that we're almost to the end of summer.
Where does time go?
I don't know. I can't believe it's football season already.
I know, but we'll get into a few things later. But I definitely wanted to talk about some of the revenue numbers. And as well, in your press release, you announced a newly appointed CFO, Mario Pinho, actually to the podcast. So let's bring him in. Mario, pleasure to meet you. And welcome to the world of cannabis. How's that feel?
I'm excited about it. Well, first of all, really nice to meet you as well. And yeah, I'm excited about the opportunity. MariMed's great. It's in a great position to take advantage of the opportunities. So yeah, I'm looking forward to diving in a little bit more. We just released our quarter numbers and they were really good.
Yeah, well, we're going to jump into that in just a second to get a little bit more about who you are and your financial background. But first, Jon, I want to begin with you. You guys performed well once again on the top line and reiterated to your 2024 guidance. You want a quick recap some of the notable numbers that you reported, and it's important to your shareholders?
Yeah, I mean, we are continuing to outperform our competitors. And, our margins may not be there because of the fact that we're still in the growth pattern that they all went through a couple of years ago.
Yeah.
We're very confident with the growth coming closer and closer to getting online, such as Maryland just opened up the grow rooms, and it's going to take until the end of Q3 before those grow rooms are on the shelf. But that revenue will definitely start gobbling up all the losses that we had to carry while we were in the development stage. So we're very optimistic that reaching our guidance is still very strong. Outperforming in the revenue side is because our wholesale business is really crushing it. Maryland keeps going up, trying to battle Massachusetts for the number one wholesaler, and our Illinois is continuing to grow their wholesale business, which is now showing in our margins in the retail stores that we own in Illinois. So we're very excited as those all continue to grow and open. Then we have our additional dispensary in Maryland that will open sometime in the next few weeks, hopefully. And then adult use sales, which we didn't have in our forecast, opening for probably in the next month or two, as they have just started handing out the final approvals. So once we get that, we'll be up and running. And
yeah, that's great.
Places. Then in Massachusetts, we got our Quincy adult use license, and after the long wait, we've seen great revenue coming in with patients flocking to our store. Maybe a little slow at the beginning, trying to get us at the know that we're there, but it's summertime. People travel in Boston area, but we'll get there. We're seeing every week that we're increasing revenue day over day and week over week. So we're very optimistic about that increase in revenue coming in the quarter.
The signs of emerging industry, right? It's another chapter in the cannabis book where it's hurry up and wait. But that's just the name of the game, obviously, in this industry. But I do want to circle back to your wholesale, which you continue to be strong, a strong point for the company as you continue to see growth, especially, and as you said, in Massachusetts, where based on data and industry trends, many companies I have found are struggling in that market. So why are you, I guess, creating a different narrative? Like, what is it about Massachusetts that you are actually having success versus competition?
Well, we're paying attention. We have our brands that are growing in
Gotta
every
love paying
state,
attention.
and the brands are really what people are asking us to make better. So we're improving and marketing our brands. Our brand of Betty's is number one in Massachusetts, number two in Maryland right now. But in Massachusetts, we've spent a lot of marketing dollars to let people know not just about our brands, but about our retail stores, so that we're able to see increases in flatness in the retail, so that people are driven to our stores. We're seeing increased footprint of people coming in. They may not be spending as much as they had in the past, but having that clientele coming in and growing it is very important. And that's where our marketing dollars are starting to pay off.
Yeah. Well, let's talk about expansion. I know you outlined just a few of the dispensary locations, especially the one in Quincy, along with finishing expansion marijuana grow facilities. So, how are they doing, and what's next? I guess for the asset openings, you want to maybe quick top line that again?
Yeah, I mean, like we just announced and we just said today, we are basically started our grow and our expansion in Maryland in Hagerstown. We have 5 of our 9 grow rooms already up and running. And in 4 weeks, we will finish that whole grow cycle and we'll be in cycle to start keeping cuts every week out of the new cycle, which will add to our flower capabilities, making us one of the top in the state in terms of harvesting. Then in Massachusetts, as we talked about Quincy, that is still a growing location. And then we have Ohio, where our retail store will be going to adult use as soon as we get approval. And then we have a second store that will open sometime in 2025.
Yep.
Plus, we have Missouri, our processing center, which we hope to have the approval to start selling our Betty's and other edibles there as soon as possible. And that will be under a management fee at first, but then we'll be able to roll that in with the approval and transfer of the license. So we're very optimistic about all those. And then you throw in the retail store that I brought up in Maryland, which is the second one, and we're looking for new opportunities in Ohio and Missouri to become vertical and additional dispensaries in Illinois.
Yeah.
Leads us to the biggest of all the future growth, which is through Delaware. Delaware announcing their adult use is giving us the ability to have our partner start adult use as soon as possible, and then sometime in 2025 finish our first pillar, which is to complete the roll ups of all of the partners that we started writing applications for in the past. And this is the last one, and we're very excited about finishing that pillar.
Yeah, we were talking about Delaware actually a couple weeks back, but not a lot of competition right now. But it's a very, very lucrative market to say the least. I know we looked at about a year ago the way Maryland rolled out and what a success that's been. But this week, Ohio announced adult use cannabis. I actually drove around to a couple of places around the market on what was it? Today's Thursday. That was Tuesday. Tremendous success. Some companies reporting as much as 700% growth within the first day. So that was encouraging to say the least. But, when you look at this market, the overall size and the expansion it's going to apply for your company, what comes to mind for you?
Well, what comes to mind to me that people are very questionable of is we've put a lot of money into all this expansion. Now it's going to start paying off as
Yeah.
we get these approvals to open and process and start selling in them. Then people will see that everything we've been doing is exactly what we said. We're keeping our head down and we're moving forward with increasing our revenues, our margins, and our EBITDA.
Okay. Well, other big news in your press release was the newly appointed announcement of your CFO, Mario Pinho. Good to have you on the podcast, sir. Welcome to the cannabis space. And you're coming in at probably the most opportunistic time within this industry as it's laser focused. We're going to see some radical changes pertaining to this industry within the next, 30, 60, 90 days. Monumental moment that could happen in Washington where we could see rescheduling. But all this stuff and moving parts outside of that, let's find out a little bit about who you are and what your financial background is, Mario.
Yeah, well, first of all, thank you. Thank you for welcoming me here, and I'm excited about the opportunity. You know what? I must be honest. When I wasn't specifically setting out to get into cannabis, but after about 10 years in high tech and 20 plus in finance, I was looking for something new, something exciting. So when a headhunter called about MariMed, which is how things usually happen,
Right.
I said, "Hey, looking for something new, something exciting. Let me talk to them." I met with Jon. I met with the management team. I was really impressed with them and the culture. But what the great story about us is our growth story, and
Yep.
51 million in revenues in 2020, 149 last year. Our guidance is 5 to 7% growth over last year. So that's what really kind of intrigued me. I also like that they've done and are doing a lot of M&A. I've done a lot of M&A
Yep.
in my background, probably 40 plus or so, some larger than what MariMed is doing. But I have a lot of experience from fundraising perspective and capital allocation methodology and optimizing that. So
That's
I'm
great.
excited about the opportunity. And you're right, it's definitely not for the faint at heart. It's just been a month, and it's a lot of stuff is happening. Things move
Well,
really
there's
fast in cannabis.
always moving parts to say the least. But one thing I found about this industry, look, it's brand new. The plant's been around for a long time. But as far as a business aspect, you get a lot of people in the corporate world that jump into this space and they find it very polarizing and it's a lot of fun. But John, real quick, what impressed you the most about Mario?
I would have to say how he fit into our group. He just really feels part of the family the minute we met him, and I think he has a lot to bring. He has a lot of background in finance and M&A that will really help me be able to focus more on bringing deals in, and Mario running the financials, but also being able to advise how he sees these possibilities to grow.
Yeah. Well, saying that, Mario, like, what do you think, comes to mind when it comes to both short-term and long-term goals for the company?
Yeah, that's really interesting, and we posted great results for the quarter. We continue
Yep.
to outpace our peers on revenue growth. Wholesale revenue was up 9% quarter on quarter, and we had our 8% sequential growth year on year. Retail also grew significantly. We're really happy with it, up about
Yep.
6%. So in the short term, I think we want to continue to execute on our strategy. Obviously, we're showing that it's working. We're also in the growth mode. So long term, we want to be ready to capitalize on opportunities. So we can deepen and expand our markets. John already alluded to some of those initiatives. We want to make sure we're well positioned to take advantage of any opportunities, kind of land and expand where it makes sense for us in terms of markets, in terms of regions. And so our goal is to, I think what John said, really focus on our margins. They are in a good place, but obviously a lot of compression we're facing as we're making more investments.
Yeah.
And that revenue hasn't come online yet. So we expect that to happen towards the latter half of the year and into 25. So we're excited about that in terms of the potential for, growth in our adjusted EBITDA and free cash flow. It's about driving value for our shareholders long
Yeah.
term.
It's great. I don't we always got to speculate in the media industry. And let's face it, 280E has been a probably the worst thing ever for this industry, to say the least. I know you and I have had a lot of discussions pertaining to that, John. But in the event there is rescheduling, and you talk about expansion in Maryland, Ohio going live, and Delaware going live, this becomes a much different conversation for the company in the next, and it's not even that long term. It's like within the next 6 months. So when you factor a lot of that stuff in, like, how are you preparing for that? And how much different does this company look at? It's really a question for both of you. And John, I'll start with you.
Well, the rescheduling won't change a real lot other than the 280E, which we're real excited about that. I mean, getting rid of the
Exactly.
280E is a major cash burden. But the fact is that the rescheduling doesn't give you the ability to ship over state lines. It's still going to be state controlled and
Yep.
mandated, which I think is good for the industry and good for the consumer. It will actually reduce some of the costs because of the 280E being able to be real taxes. And we look at it as a way to grow our business and have even more positive cash flow, but to use those dollars for growth versus having to borrow. I mean, we've already proven, as you know, Shad, we went out and got the Needham Bank deal at one of the lowest rates that any cannabis company has seen. And we're going to continue to do that. We feel that we should be able to borrow like any other company. And that's what this does, gives people the ability to borrow in cannabis at real rates.
Yeah.
And
Mario, you want to? Yeah, go ahead.
yeah, I was going to say, and beyond that, I think rescheduling will allow institutions to continue to do research on cannabis with without the restrictions they have now. I think as we learn more and more about the benefits, medicinal or otherwise, of cannabis, I think the perception will change, and I think long term, this is a process. It could lead to federal legalization down the road. Who knows when that'll happen? But it's good. It's some good tailwinds for us.
Yeah. Last thing I'll ask: what makes a good CFO compared to a great CFO?
Oh, wow.
You like that question? It's
I
like,
think it's a great question. I think it's just being agile, kind of like really rolling with the punches, kind of like really addressing the current issues. When you're in an industry like us, which is very regulated, and things are coming at you all the time, just being able to flex, I think, is key. And obviously, being diligent from a financial perspective.
yeah.
Focusing on systems, focusing on our people, and ultimately just really having an eye on our margins and our profitability and driving towards those.
Yeah, which this industry didn't really have a lot of out of the gate, but we're in that stage now, right, Jon? So it's all about turning profit, top line, and like I said, continue to grow.
Yes, it is, and I'm happy Mario's here. Mario's going to be a great asset for us, but he's going to be one of the great ones because he's able to think quickly on his feet,
Okay.
and we can find solutions to improve this company even more together.
Okay, that's great. Last thing I'll leave with you. What are you anticipating? You've provided guidance for the remainder of the year. So, what will be the main focus? I think we kind of have an idea with some of the expansion in some of the different markets, but where's the primary focal point moving forward for the remainder of the year?
Our focal points are going to be on really making sure that our revenues are growing and that our margins are improving. All that will be proof of what we've been saying, that we're doing all this in a methodical fashion to build the company to positive cash flow, positive earnings, and good margins. So we've already got the revenue heading upward. Now it's the time to finish what we started.
That's great. Well, listen, tell the team, welcome to the team, Mario. I'm sure this is going to be an exciting time. It is, there's a lot of ups and downs related to the industry, but everybody I hear, it's just, we're all a little crazy in some sort of ways, but it's something we absolutely love because it's an emerging industry, and that's okay because, many people still believe this industry is going to present the greatest generational wealth opportunity within this generation. And I think that's what obviously excites people on the future growth of the overall space that include companies like MariMed. So best of luck. Jon, as always, great catching up with you. Tell Ryan, tell Tim and Howard I say hi, and let's keep in touch.
Thanks, Chad. Love being here.
Yeah, appreciate it, Jon. Thanks, Mario.
Great talking to you. Thanks,
You,
Chad.
you as well. Hey everyone, thanks for watching our latest podcast. What'd you all think? Is there any information that we're missing? Is there anything you want us to cover? As these industries heat up, we're getting access to more and more big hosts. So let us know the questions that you want us to ask for you. As usual, smash that like button. We want this to go viral. Click on that bell for all notifications for the latest interviews that we're doing. And as usual, let's build this community. Subscribe to our channel because we appreciate it, because we wouldn't be here without you. Thanks for watching, everyone.